Hello everyone, how's it going? It's 12:30 and that means that you and I have an appointment and it's time to discuss it with Drake. And welcome to episode number, you saw it earlier, 104. Today's quick topic is capital gains when you sell property. So, before we get started, as always, if you ever miss a live broadcast, simply just go over to YouTube and type in Drake's Real Estate TV. Boop, 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 boop. Hit subscribe. And if you stop by, please say hello in the comments. I'd greatly appreciate it. So let's get started. If you're selling a home, or better yet, if I am selling your home, you probably have made profit. And that profit is probably taxable, right? So depending on your property's value and other factors, you might be hit with a big tax bill that you weren't expecting, okay? Capital gains on real estate, it can be taxed. But there are a few things that you can do to reduce or even avoid what you owe the IRS when you sell your home. So, a capital gains tax is the fee that you're responsible for paying on the profits that you make when you sell an asset. Your capital gains taxes can be applied to stocks, bonds, tangible assets like cars, boats, and yes, real estate. So, the IRS in many states also assess the capital gains taxes on the difference between what you're paying for your asset, known as your total cost basis, and what you sell it for, what we like to call profit. Okay, so let's talk about capital gains in real estate, because that's why you're here, right? So, the capital gains you might owe if you sell your home vary depending on your tax filing status and the sales price of your home. You may also be eligible for an exclusion. Yay! So the IRS might allow you, they usually do, to exclude up to $250,000 of capital gains on the sale of your real estate if you're single, and up to $500,000 on real estate if you're married and file jointly. So if any of the certain number of factors are true, then you pay tax on the entire gain of the sale of your home. So these factors include the home wasn't your main residence. You own the property for fewer than 2 years in the 5 years before selling it. Not living in the house for at least 2 years in the past 5 years before you sold it. You claim the available exclusion on another home in the 2 years before selling this current home. Buying the house through a like-kind exchange, which is like a 1031 tax exchange in the past 5 years. Or you have to pay expatriate tax. Okay, so please consult your CPA. Okay, if you do owe taxes on what you made from selling the home, different capital gains tax rates actually can apply. So let's talk about that. So capital gains tax rates. If you own the asset for a period of less than a year, then typically short-term capital gains tax rates apply. The rate is the same as your tax bracket. Long-term capital gains tax rates will usually apply if you have owned the asset for more than a year. A lot of people qualify for 0% rate, but depending on your income and filing status, you might pay between 15, even 20%. So, avoiding capital gains taxes when selling a home. That's why you're here, right? So some of the things that you can do to avoid having a tax bill from selling your home include these. The best way to avoid taxes is to live there for at least 2 years. And they don't have to be consecutive, okay? So if you're a house flipper, you have to be careful here. If you sell a house you didn't live in for at least 2 years, your gains are going to be taxed, or probably will be taxed. If you sell a house in less than a year, it's particularly expensive because you may have to pay the higher short-term tax rate. And then this, determine if you actually qualify for an exception. You might still be able to exclude some of the taxable gains on the sale of your home because of work, health, or unforeseeable events. Finally, if you make improvements, keep your receipts. The cost basis of your home will include what you paid to buy it and the improvements that you made over the years. If your cost basis is higher, you may have a lower amount of capital gains taxes to pay. Remodels, expansions, and other updates can reduce your taxes. Once again, please consult your CPA. That's all I have for you today. I hope you found this information useful. Please come back next week. I want to give it a shout out to Realty Times for the information that they provided me to provide you today. And as always, please don't keep me a secret. Share this with everyone you know. If there's a topic that you would like me to discuss in the near future, let me know. I will get it on the calendar. I hope that you, yes, you, have a fantastic week. Please don't forget to be kind to one another. Don't forget to live, laugh, and love. And until next week when we meet again, when the next move matters, contact Drake for Homes. All right? Thanks, everyone. See you soon.